The stock of the day is brought to you by IG, Australia's #1 CFD provider. Trade over 17,000 markets with extended trading hours on key US shares and competitive spreads, all on an award-winning platform. Get started at IG.com.
And our stock of the day is TPG Telecom. It is selling its fibre network to Vocus Group for $5.25 billion. That consists of 27,000 kilometres of fibre, which makes about $550 million in annual earnings. TPG will retain its mobile network and infrastructure and consumer mobile business. The deal expected to settle in the second half of 25, and TPG expects to reap $4.7 billion in net cash from the sale. Chief Executive there saying the deal unlocks the value of our fixed infrastructure assets while strengthening our financial position and creating a more focused and streamlined business with significant optionality for our optimisation of our capital structure. And TPG will pay $130 million annually to Vocus for access to the network services over an initial term of 15 years. And the acquisition does require approval from both the ACCC and the Foreign Investment Review Board. Checking in on the share price, not a lot of movement really, off around 1%. All right, so let's get some detail and analysis. Michael, unlocking potential there, optionality, that's what the Chief Executive's talking about. How's this place, TPG then?
I guess clearly it, when companies have, I guess multiple parts of the business and some aren't performing as well as others, the market tends to like, if you can remove the bits of the business that you don't want to concentrate on anymore, and fully focus on what is working. And in terms of the mobile part of the business, they're growing their revenues a bit. They're able to increase prices just like Telstra has been. Look, TPG, it's not one I follow closely. I just don't think there's a decent amount of upside from here in a market full of other opportunities, and it's quite interesting to see that the share price hasn't really reacted today because the market did get sense that something was in the works. I think it was a few weeks ago, and TPG had to come out with with some clarification to the market that it was something they were interested in doing, or they were looking into doing, and the shares have actually gone up almost 10% since that realisation a few weeks ago. So in some ways it's not new news anymore. Look, it's not one that I'd be very interested in seeing. Very interested in holding from here. I don't see a lot of upside from.
So you'd sell it, would you?
Yeah, purely because I think there'll be better opportunities in the market. So in terms of, if you're looking at how the business can grow from here, it's mainly just mobiles now. I just don't see that growth being, exciting enough. I mean,
taking a look at that share price over the past 5 years has been in a steady decline, isn't it?
Yeah, that's the other thing. It is still in a bit of a downtrend. So it seems like every time the share price tries to have a bit of a rally, the market sells it and moves on, and maybe that's what, again, we're seeing here today. It's already moved up into today's announcement. It's not kicking on, so we can already see a bit of selling coming in.
Yep. All right. David, how are you seeing it? And I guess I should also note that just in terms of this 3D shutdown, the company lost out there about 47,000 customers, in fact, its postpaid business. So I don't know whether it's sort of lost that permanently, or that's just a nature of the switch off and customers looking to move elsewhere.
Yes, you're right, Andrew. That has been a bit of a dampener on TPG in their last results. I think this deal is positive for the company. As Michael said, it has been well telegraphed. It was a potential deal that had occurred earlier and then was off and now is on again. We think that overall that will improve TPG's balance sheet. They haven't clarified exactly what they will do with it. They've said it will improve their capital management. TPG does have quite a lot of debt, so I think a lot of that money will actually go down to reduce their debt and give their balance sheet a little bit more flexibility going into the future. But overall, we actually think it's a good business, and the deal is a positive one for them. So we've actually got a buy recommendation on them. I think that there's some upside from current levels, even though, as Michael said, that the share price has rallied quite a bit recently. We think we've got a target price of $5.50 on them, and there's an okay dividend yield of 2.9%. So I think that there's still a little bit of upside from the current level.
Well, there you go. There's your market right there. Michael selling his shares and David buying it. That's the view then on our stock of the day, TPG.
The stock of the day was brought to you by IG. Trade over 12,000 shares and ETFs, including major tech giants with extended hours on an award-winning platform. Get started at ig.com.